All right, considering the full year 2020 corporate earnings season has come to an end, what should we expect as we advance further into the second quarter of 2021 and more importantly in the new trading week? That's our conversation with Omotola Abimbola, investment analyst at Chapel Hill, Durham. Good morning, Omotola. Thank you very much for joining us on the program.
Good morning, Chimeze, and thank you very much for having me.
So full year 2020 corporate earnings season is over. Investors are looking ahead first quarter 2021. What are your expectations?
Well, I mean, Q4 2020 earnings season is nearly over and done with. We've been seeing earnings releases since the beginning of March, and up until 2 weeks ago, we just saw a couple of earnings results. For the Q4 earnings season, I think one thing we could say about the numbers is that across sectors we saw a lot of resiliency. Particularly in banks and the cement companies. Banks were able to report slightly better than expected numbers, particularly for the Tier 1 bank, despite the fact that we had a very challenging environment dominated by worsening asset quality as well as low interest rate environment. But despite that, banks still reported very healthy numbers. Same thing could be said for the cement companies that we have listed on the stock exchange. The trio of Boa Cement, Dangote Cement, and Lafarge Waco. The trade still reported improvements in their top line and bottom line on a year-on-year basis, despite the fact that we had the COVID-19 health pandemic that limited the investment spending in the economy and led to shutdown of activities over a period of time. But despite that, the cement companies were still able to report very decent numbers, thanks to the fact that we saw a significant improvement in government spending, particularly on infrastructure. And then we also saw an improvement, or let me say increase in the prices of cement as well. So due to the combination of price and volume mix, the cement companies were able to report very decent numbers. So for me, I think those two sectors, did very well in the earnings season.
Abimbola, despite the COVID-19 pandemic, the banks, particularly the Tier 1 banks, declared some stellar profit figures. On Friday, GT Bank had its AGM declaring 3 Naira dividend for 2020 financial year. What's your take on this?
I think for GT Bank, the performance was very stellar, despite the environment that we had last year. If you look at the earnings per share for the company, it went up by about 2% on a year-on-year basis in year 2020. Although we had a low interest rate environment that affected the yield on assets, the bank was able to offset that by cutting its deposits, its interest rates on deposits. So as a result of that, net interest income was up on a year-on-year basis. On the non-interest income side of things as well, we saw a significant improvement. As we saw, several individuals, customers of banks, actually embrace electronic payments, transaction channel, as we saw restrictions in across the country. So that helps to boost up, non-interest income. Same thing for trading as well. Securities trading, delivered, very healthy profits. Bond and equity investors last year, and as a result of that, the bank was able to deliver, very stellar, very resilient, performance. And we saw that, dovetailed into a dividend policy for the year, where we saw the bank actually increasing its final dividend for the full year 2020 period to 2.70 Naira from 2.50 Naira. Which translated into a dividend yield of about 9% as of the declaration date, which is still quite healthy for a Tier 1 bank with a very solid track record.
Let's look at the fixed income markets. I mean, that market had the poorest performance in Africa in the first quarter of 2021, losing about 16.5% in Naira terms, according to the S&P FMDQ bond index. However, we have seen yield in the fixed income market prop up a little. Investors will be watching that market this week. What should we expect?
Well, for speaking to your point, in Q1 2021, the Nigerian bond market, had one of its worst starts to the year ever, and also the worst performance in the African region. In Q1 2021, we saw the S&P FMDQ bond index actually shed 16.6%. As we saw use in the fixed income markets. Across the benchmark curve, rise by about 380 basis points. So bond yields and price move in opposite direction. So when we see yields increase, that means prices are dropping. And that was exactly, what happened, in the first quarter of the year. And that performance driven by a couple of factors. And I'll mention 3 or 4 of them. The first one is that, we saw, much more lower liquidity in the fixed income markets. Last year, we had a liquidity loss in the money market due to significant maturity, liquidity field rally, in the markets. But this time around, we saw, maturities of bills actually drop, in the first 3 months of the year. So that contributed, to the very sentiments we had in the market. Also, we saw the federal government, also increasing its borrowing in the primary markets. In Q1 last year, the federal government raised over 600 billion naira in the bond markets, that primary issuances. So that also drove the bearish performance. And then lastly, we're also seeing a significant uptick in inflation rate, also inflation expectation that has, more or less catalyzed a bearish sentiment of the markets. Now going forward, particularly for this week, I think the general outcome is, the general view is that over the short term, the outlook for interest rates is still biased to the upside. In Q2 2021, we are expecting much more smaller volumes of liquidity coming into the financial system. We're also seeing the federal government, remaining aggressive in the primary market by its borrowing. Last week we saw the Q1 2021, bond auction calendar, which more or less showed that federal government will still remain very aggressive in the primary markets. Also we're expecting, inflationary pressures to remain quite elevated. So I think the outlook for interest rates is still biased to the upside. But speaking specific to this week, there are 2 events that we should watch out for. There is an OMO maturity tomorrow, about 100 billion, and it will be interesting to see, whether the CBN will be refinancing, this OMO maturity, and by how much volume they will be refinancing the maturity. Also on Wednesday, we are having an NTB auction. If we see, further increase, in the NTB auction stop rates, I think, that will catalyze, further bearish sentiments in the fixed income markets.
All right, thank you very much, Omotola, for your time there. We do appreciate it. Have a blessed day.
And you too. Thank you.